Okay, all right, so let's kick off. Investment trusts, so what are they? Before I forget, obviously that's just my standard disclaimer, just reminding everyone again that I am not a broker, I'm not a financial advisor, I'm not an accountant, I'm not a lawyer, just a private trader and investor, and just educating you and teaching you from my over 20 years experience from trading and investing in the markets. So that's just my standard disclaimer. So what are investment trusts? Now, the interesting thing about investment trusts to start with is that the term investment trust is rather misleading because it's a public limited company and not a trust. So their shares are traded on the London Stock Exchange like any other company. So it's really just a public liability company, just a publicly listed company, really. So usually that's the first thing you need to understand about investment trust is that the term and the name is completely wrong. So it's it's extremely misleading. So investment trusts are not trusts in this true sense of what a trust is. It's actually just a limited company, like any company with shareholders in them, and then their shares are listed on the stock exchange, and investors can buy or sell the shares in the company. So that's the first thing, and the first big important thing you need to realize about investment trusts is that, you know, they should really rename it because, you know, it's not really a trust, it's just a company. So it should actually just be called an investment company, really. So that's a very misleading term when you hear about investment trusts. They're just publicly limited company. And I think once you understand that an investment trust is just a company with shares in the company, then, you know, the rest of what we're going to discuss about investment trusts will now begin to make sense in terms of how they run, how they behave, and how you can assess them. So like I said, investors, you know, buy shares in the company. So you all buy shares in the company, but the money that is raised is invested by the trust. That's why I put it in inverted commas. It's not really a trust. We should really say it's invested by the company. And if the underlying investments do well, then the share price of the investment trust rises. So basically, when you invest in this so-called investment trust, or let's just say investment company, when you buy shares in that company, the money they derive from sale of shares, they use that money to invest in other companies and in other assets. And of course, if they do well, then the value of the company and the assets within that company goes up. And of course, the share price of all of you in that company will go up. And of course, if whatever they invested in does badly, then you all lose money and the share price falls. So again, that's a thing you need to remember about this trust. That's again why it's important to understand that it's really a company and not a trust. So like I said, investment trusts are companies that invest in other companies. So like I said, when you buy shares in an investment trust, the money is used by the investment trust manager to then, he might then decide, let's just say, for example, we call it, let's call it Mr. Smith Investment Trust. So with Mr. Smith Investment Trust, if you all buy shares in Mr. Smith Investment Trust, the fund manager within that Mr. Smith Investment Trust, he would take the money from the sales of the shares, and then he can then go and buy shares in Coca-Cola, in Apple, in Amazon, in a real estate company, in gold, in whatever, in Afghanistan. And so he can just buy and choose what he like. And then, like I said, if all these assets he's buying does well, then all of you as shareholders will profit from that. And if it doesn't do well, you don't. So basically, investment trusts are just companies that invest in other companies. So how do they work? Like I said, they follow a wide variety of investment policies, usually specializing in a type of investment or geographical region. So again, just like any company, with a company, you all decide, or the board of directors or the shareholders in an annual general meeting will decide what the investment policies of that company will be, or what type of investments you want to invest in, or which sort of countries you want to invest in. And of course, it can vary depending on the shareholders and the board. So when they meet, they can decide this year we want to concentrate our investments maybe in the tech sector and the retail sector and the banking sector. And we want to focus on maybe Germany and Norway. So, they can really decide on a wide variety of ways they want to invest the funds they receive from shares that they've sold in the company. So again, this is another thing I don't like about investment trusts, because these policies can vary depending on the board of directors and the shareholders. So as with other investments, the value can fall as well as rise, and you may get back less than you invested. So like I said earlier, if the fund manager within that trust does well, then the value of your shares go up. If they do badly, the value of your shares go down. Now, an investment trust is a collective investment, and it can give you a stake in hundreds of companies, because again, like I said earlier, when I used the example, within that investment trust, they could be buying shares in Coca-Cola, Apple, Amazon, AstraZeneca, Barclays Bank, HSBC. So they could just be buying stakes and shares in all these companies, and you'll have stake, you become shareholders via that trust and have a stake in all these companies that they choose to buy stocks and shares in. So like I said, since they're a company in reality, not really a trust, they are really a company. They are owned by shareholders, and each trust has an independent board of directors looking after the shareholders' interest. So again, like I said, that term trust is very misleading, because it's really just a public limited company, and it runs just like a public limited company with an independent board of directors. You have shareholders, and the directors looking after the shareholders' interest and making sure things are run appropriately and judiciously. So again, this is the importance of understanding that really investment trusts are, in essence, just a public limited company by and large. So as an investor in an investment trust, obviously, since you're a shareholder, you can attend the annual general meetings of this trust. So again, like I said, at the annual general meetings, you can vote. You can all, as shareholders, decide who the fund manager is, what the policies would be, where the investment should be, what you should invest in. And all this can be decided at the annual general meeting. And if you've bought shares in that investment trust, you can attend these meetings and vote and be part of the decision making. So again, like I said, that's understandable if you just keep remembering that investment trusts are just like any other public limited company. That trust really just throws people off. Now, unlike unit trusts, unlike mutual funds or open-ended investment companies like index funds, investment trusts have a fixed number of shares in issue. So there's a fixed number of shares they can sell. So unlike mutual funds, where millions and millions of people can buy mutual funds, and the mutual fund never closes, or like index funds, millions can buy into an index fund and it never closes. That's why they're called open-ended investments. But with investment trusts, they have a fixed number of shares in issue. So meaning that, for example, if an investment trust only issues 100 shares, if those 100 shares are sold, then you can't buy any more shares within that trust unless somebody within that trust wants to sell their shares. So they're sort of closed-ended. They have a fixed number of shares in issue. So this means they do not have money flowing in and flowing out unpredictably, which might help the fund managers to plan properly and plan ahead and plan their investments, because they know the inflow and outflow of funds is sort of stable. So that's another huge quality of an investment trust, is to realize that they have a fixed number of shares in issue. So you might find sometimes you might see an investment trust available to buy, and then maybe a couple of weeks later you want to buy shares in that trust and they say, okay, they're not selling shares at that time. So they have a fixed number of shares, and if they're not available, then you can't buy into them. Now, investment trusts, again, this is another important reason why you should know that they're just like any other public limited company. Investment trusts can borrow money, to take advantage of investment opportunities. So for example, now, like with this COVID-19 pandemic and crisis, there are lots of good companies with low valuations and low PE ratios, whereby, they're looked at undervalued. So an investment trust can go and take a loan out of the bank and then buy all this undervalued stocks in the hope that they make a massive gain. And, if they do make a massive gain, they can then pay off the loan and, just keep the profits. And then that can benefit all the shareholders. But as you know, once you start to borrow money, although the borrowing can increase the returns for the shareholders, but if their bet is wrong and all the shares they bought or whatever they invested in drops in value, then it could also increase for potential losses, because now the value of the assets they bought have lost value, and then they still have the loan to pay back. So it could be a double whammy. So it can work both ways. You can either have enhanced returns from them borrowing money, or you could obviously have enhanced losses if things don't work out well. So again, this is another thing one has to be careful about with investment trusts, in terms of how much borrowing are they doing or how much borrowing they can possibly do, which could actually take you one way or the other, depending on the outcome of their borrowing and the assets they bought with the loan. So again, they're just behaving like any other limited liability company that can go and take a loan, to help their business run. Now, investment trusts usually have smaller operating costs than mutual funds, so their charges are generally lower than mutual funds, but not as low as index funds. Index funds are still the ones with the lowest charges, because as we know, with index funds, they're passively managed. Investment trusts still have to be actively managed, just like mutual funds, but their operating costs are lower. And also it's because it's a closed fund, they have a limited number of shares, so they're not as crazy as mutual funds. Now, investment trusts are found mostly in the UK and Japan, although you find countries like Canada and USA, they're slowly developing investment trusts. Although in countries like USA and Canada, they tend to come up in the form of venture capitalist funds or venture capitalist trusts. So again, it just gives you the ability to invest in whatever you choose to within that fund. But the strict investment trusts and the strict term of investment trusts are found mostly in the UK and Japan. Okay, so let me just quickly go to the website and we'll just show you a few investment trusts. As usual, use my Hargreaves Lansdown. So again, because now that you know investment trusts are just like a public limited company where you buy shares in them, you buy and sell shares with them any time of the day, like any other company, then you will go under shares to search for investment trusts. You go under shares. If you go under funds, you'll find very few. But if you want to find a lot of investment trusts, you go under shares to search for them. And let's just type in investment trust. investment trust, and enter. Okay, so you can see we've got quite a long list of investment trusts under Hargreaves Lansdown. We've got 2 pages of investment trusts. And sometimes if you're lucky, they might give you an idea of what they do from the name. Of course, you need to check. You can see this one is Broadwalk Real Estate Investment Trust Units, City of London Investment Trust, Edinburgh Investment Trust. Obviously, that doesn't give you any idea what they do. Let's just click on one and find out what they do. So let's go, oh, okay, that's not available online. We've got Japan Brazil Investment. Let me go to page 1. I want to pick one that is UK based. Okay, let's look at this Bankers Investment Trust. So let's go to Bankers. Like I said, and again, this is another reason why I don't like trusts, because they can give themselves any names, because what they invest in, you really have to search them to find what are they really invested in. So this is a Bankers Investment Trust. Again, we need to go to, you can see here where they're saying that they're top 10 holdings. So they can see they're invested in Microsoft, Estee Lauder, Visa, American Tower Corp, Amazon, MasterCard. Then we invest in Warren Buffett's fund, Berkshire Hathaway for Class B, Intercontinental. So you can see they have a very wide variety of stocks that they invest in. Let's see their top 10 sectors. You can see they're in financial sector, technology. So you can see the name is very misleading. The name doesn't give you any idea what they're investing in as an investment trust. So you really need to check it in detail, because you can see it's financial, technology, consumer defense, communication, healthcare, real estate. So again, this is the thing about investment trusts. They're quite a variety of investments they do. And again, you can see the top 10 countries they invest in: United States, UK, Japan, China, Switzerland. Anyway, I think you're getting the idea. And again, this is their performance for 6 months, but let's see if we can get their long-term performance. Let's go to charts and performance. Okay. So you can see in a 1 year, they're up by 5%, 2 years, 16, 5 years up 59%. When you talk about premium or discount, I don't want to make this too complicated, but when they're trying to calculate the share price for an investment trust, they use what we call net asset value. Net asset value. So the net asset value obviously is just their total assets. That means all their income from dividends, from cash, from the stock they've bought and the assets they bought, all that total assets minus their liabilities. And of course, liabilities would mean any loans they have, the manager's fees, any fees they have to pay. So it would be assets minus liabilities, and then divide it by the total number of shares within that trust. That will give you the net asset value. And, you know, and that's the proper, and this figure is calculated at the end of the trading day every day. So that net asset value, for example, it could come up, the real, in fact, let's use this as an example. So the real assets minus liabilities divided by the outstanding share of this trust, the real net asset value, for example, could be 800 pence. That's the true net asset value, is 800 pence. But you can see if it's now trading at higher than that, which is now trading at 992 pence, that means this is trading at a premium because it's trading above what is the real true value. So that's what this premium discount means. So it's called a premium if it's trading above the actual net asset value. And if it's trading below the actual value, then it's trading at a discount. So these are all these, sort of subtleties in terms of trying to assess investment trust compared to how straightforward mutual funds and index funds are. With investment trusts, it's not that straightforward. And trying to understand and find out their investment policies and their invested objectives too is not that straightforward, even just from the name. So you can see even their names don't help you. So it will mean you checking and doing a lot of research on each investment trust to see if they sort of help you achieve your own investment goals. So again, that's why I'm not a very big fan of them. Okay, so that's it on investment trust. It's quite straightforward, as you can see. Any questions? If you have any questions, do click the hand button or send your questions through the question box. And as usual, most of you now on the online community platform, so you can also ask questions on the platform. This recording will be posted on the platform, so you can see it to be on the platform by tomorrow morning. And like I said, the platform is there for you to make it what you want to make of it. Don't forget the themes we have going currently on the platform. Again, your input and suggestions, comments, and additions are welcome. Like I said, we want to learn from each other and learn from everybody's experiences and what they think about the markets.